What's up, everybody? I'm going to be sharing what I'm looking at going into next week. So right here I have the three indices: SPY, QQQ, IWM. I have two ETFs, gold and silver. I have two companies, Microsoft and Apple, and then I have the dollar right here. So I only have two companies right here, Microsoft and Apple, just because I feel like it's super hard to play individual companies right now. They've been super choppy lately. As you can see on Microsoft, like for the past 2 months, it's been just consolidating, super choppy. And if you enter the swing trade within the past 2 months, you most likely got stopped out or whipsawed around just because you've been consolidating. It's super hard to get like the time the trend on these companies. Microsoft, same thing with Apple. Apple hasn't been as bad. Straight move up, straight move down. But I'm just looking more so at the ETFs and indices going into next week. I feel like individual companies are harder to play right now. They're just super choppy, so I'd rather stay out of those. So I'll briefly go over these two companies, Apple and Microsoft. I'm going to go over the dollar as reference and how it correlates with the overall market, but I'm going to go over the indices first, and then I'll go over gold and silver. So the first thing I really want to dive into detail is this red trend line, which I'll go over in a little bit, but first I want to explain where we are at. So this is on the 8-hour time frame right here. So since back in June right here, this was late June, we hit the bottom of this trend line, and since then we were slowly melting up. So over the past 2 or 3 months or so, you were really able to play calls and you could have been profitable on SPY. As we hit the bottom, we bottomed up, we were slowly melting up until really September 1st is really or September 2nd. But you will notice back around late August 20th, we saw like the last little pullback before we saw that really euphoric move. And this is something very similar that we saw back in June, and I was talking about this as well. In early June, where we made this euphoric push up, it was just really straight up, and then we crashed down. And the same thing sort of happened here, where we were slowly melting up, slowly melting, a little bit of pullbacks, and then right here, August 20th was around the last sort of pullback before we made a over 20 point move up, over 20 point move up. And it was really this euphoric move that was sort of concerning me, and I actually posted something on Twitter right here. I posted this on August 30th. This is the euphoria you see before significant reversals, saying this is the top and this is sort of the market cycle. And then this was September 3rd, where the Dow was the Nasdaq was almost down 6% and the Dow was down 1,000 points. So if you aren't following my Twitter, you can always give it a follow, Brandon for Chef. But so right now, going back to SPY, that is basically just what has been happening over the past few months. We made the move down, slowly melting up, and now we've made a bigger move down over the past week or two. I will go deeper into where we are at now and what I'm thinking, but like I said, I wanted to go over this red trend line first. So this is the monthly time frame, and I talked a bit about this red trend line in staff notes. I made a few posts on it about a week or two a few weeks ago before we made the move down. So back in late August, and I was saying how this trend line came into play back in early 2012. We had right here, and ever since then we've really been hitting tops, and it's been coming to play. And that actually came into play before we dropped when we dropped for COVID. So it came into play February 1st, and that's when we dropped. So I said this is a super important trend line. We're going to be testing it, and one of two things are going to happen. We're either going to test it and reject it and come down, or we're going to test it, break it, which would be the trend line that came in play since 2012, which would be huge. If we test it, break it, retest, wait for a retest, and then if we bounce off of it, that is super bullish, and that's when you can enter a bigger position into calls. What ended up happening is we ended up breaking above it for a day, and I said, okay, we want to wait for a retest. And I always say when we break above trend lines or technical levels, you always want to wait for a retest and then a bounce. You never want to enter a breakout trade without a retest, and this is exactly why. They're low probability trades, and even though breakout, a lot of people were chasing this, FOMOing into it. Oh, we broke out, we must keep going up. Always want to wait for a retest, because the next day is when we came down, and this was the beginning of the drop. So right here, what I'm looking at is we're at the bottom of this trend line. Okay. This trend line we've been holding since the March lows, and this is a very significant trend line in my opinion. We didn't break it when we first dropped, then we had a dead cat bounce, and now we came back here and we tested it again. Again, couldn't break. We rallied the last 2.5 hours or so on Friday, so as you can see where we bounced off that trend line again. So this trend line is obviously very important. I'll be watching to see, right now the risk to reward in my opinion on the S&P 500 is to the upside. We're at the bottom of its range. The risk to reward is to the upside. On a perfect trade, you can risk, if you enter on the bottom of this trend line, where you can set a stop loss at this level right here at 328, you can risk about 5 points, and you can go up about 20 something points if we hit the top of its range. So the risk to reward is definitely there on the upside. That's why I've been looking at the upside. But if we do break below this trend line this week, that's when I'll become more bearish, because we haven't broken below and held below. We broke below it back in April or May. Yeah, we broke below it back in May. We had a head and shoulders pattern forming. Shoulder here, head here, shoulder. We broke below and then we popped right back up. If we break below this, retest it and hold, that is where I will look to enter puts. You can look for a position to the short side. And that's when the momentum to the downside should really start to pick up. And I'll set a stop loss above this technical level of 333. So right here, if you took this trade down, say we broke through on Monday, and then, by the way, if we come above, once this trend line comes above this technical level, then for me, it will be this technical level, because we have bounced off of this technical level 3 times in the past month. But if, say we drop below on Monday, stop loss would be this technical level. That's about risking a point. And then this will be 328. That's about a 4 or 5 point drop. This can be my first price target, and then my second would be 322. I'll see how price action reacts around these few levels. If we ever drop below this, super bearish, and then I would look for a bigger move down to the 3. I remember just like the 288 levels. 288 levels were super. This is where like there's strong technical levels, a lot of resistance and support was flipped over here. I remember 297 was a level, but I don't even have those drawn out yet. But if we did drop below 323, that is where we will see heavy momentum to the downside, in my opinion. What I'll be watching for going into next week, though, is for a retest of this trend line once again. If we don't see that, just a bounce off of this trend line, or off of this technical level 333. I'll be watching for it on the 1 hour or 4 hour time frame. Once we see a bounce, if we do, then I'll look to take a position to the long side with a stop loss again below this trend line right here, or you can do it below this technical level. So say we bounce to about 334, 335, I'll take a long position, risking about 2 points to potentially make a profit target. I'll use this upper trend line right here, which will be about 10 to 15 points. So that's a good risk to reward trade in my opinion. So that's something that I'll be looking for. Of course, I'll keep you guys updated. But a break below this trend line and a retest and rejection, I would look to short it. A bounce off of this trend line, you can look to go long with a stop loss below 333. So that's what I'll be looking for. QQQ. Let me go over this. This chart's a lot more choppy. I feel like the Qs are harder to play right now, but we have this trend line that we did break through on Friday, and we actually retested it and held below it. So that's pretty bearish, and now we really just have this last technical level at 266. And then I do have this trend line that I drew in today that I made a little more transparent because it's not as important, but it's from the pre-COVID highs down to which acted to as support over here. So if we do break below 266, you may see this trend line coming in around 261 act as additional support. But if we do break below 266, I would watch for the momentum to really pick up there, especially if we don't bounce on Monday. This is going to be the week 3 going into this drop. And if we don't see some sort of bounce on Monday, then the momentum to the downside still seems to be there, People are still skeptical about buying, so I would be careful with that. And I would watch for the break below 266. IWM. This is a bit more interesting. I feel like IWM is a little easier to play. It's not as choppy in my opinion. It's kind of clear. So IWM, it topped out, and it was kind of obvious it was topping out. It kind of made this island move up here where we popped up pretty hard. We had a double top, and now we're dropping below. It had this resistance trend line that flipped to support over here. We broke through it, and then it's acting as resistance again. And right now I'm really watching to see if we bounce off of this level, 148.82, or if we come down and test 144 again. If we come down and test 144, that's the next level of major support where I'll be looking for a bounce to go long with a profit target, see how it reacts around 149. I'm always a fan of letting my winners run and cutting my losses as short as possible, and always constantly updating my stop losses. So a bounce off of 144.8 to 148, around this 149 level, I'll have my stop loss around break even then. In my opinion, I mean, that's 4 or so points, but I feel like at that point I'll just have my stop loss at break even, and I wouldn't look to take profits yet, and I'll let the trade play out from there, because I'm a big fan of letting my trades run. So I'd rather get stopped out for a few points on IWM than letting it run and see where it does, especially if my stop loss is at break even. I have these two blue bubbles filled in because there can be a possible head and shoulders pattern forming on IWM. Shoulder one right here, the left shoulder, a head over here, and if we see another bounce from IWM this week where we come up here and then we bounce like this and come back down, that can be the third shoulder or the right shoulder, in which I would watch for a breakdown below the neckline coming in, and I would say this 145 level would definitely be the neckline, so I would watch for that, which would be if we do pop back up and drop back down. That obviously with the head and shoulders pattern, for those that don't know, it's a bearish breakdown pattern, so then I would watch for some heavy selling to the downside. Gold and silver have been choppy, are pretty choppy recently. So we had this trend line that it broke through early September when he dropped through. If you haven't noticed, gold has been moving with the market. So when the market comes down, gold has been coming down. It's been making big moves up when the market's been moving up, and that has a lot to do with the dollar as well, which I'll go over. But gold right here, when it broke through this support trend line, it has now acted as resistance, so I wouldn't look to go long just yet. I would look to go long. The next position on gold would be around 180 again. There's a demand around 180 every time we test this level where we're bouncing, and it's holding this support trend line right here, so I'll watch for a retest of this to go long with a stop around under 178, 179. Silver looks a bit better. So we have silver in the symmetrical triangle right here, and really waiting for a breakout to either side. Again, this is a lot of chop, and I just wouldn't enter silver right now unless if there is a clear bounce off of like 240 or 24.49, or basically 24.5, or if we bounce off of this trend line right here, but we do have this resistance trend line. I would say your best bet is waiting for a breakout in either direction. So if it breaks this resistance trend line, wait for a breakout, wait for the retest, and if it bounces off of this, that's a good position to go long. Same thing on the downside. Wait for a break of this trend line, wait for a retest, and wait for a rejection, and that's when you could go short. So you could take puts on silver with a stop loss above these trend lines or below this trend line right here. I'm going to look at the dollar really quick. So as you can see, the dollar has been selling off hard with the market rally, and then recently it started bouncing a little bit, and it's been in this downwards channel. And then once the market fell hard, the dollar broke out of its downwards channel, popped out of it. We came back down once we had that bounce on the, what did we bounce on? Yeah, we bounced on the 9th. The dollar came back down when we bounced, and then it bounced off of this trend line right here. It was resistance that flipped to support, so it bounced off of this, and now it's coming back up. So the dollar is really important to pay attention to. If the dollar is going up, watch for the market to be weaker, and watch for gold and silver to be weaker. If the dollar is coming down, gold and silver will most likely be strong. They're opposites of each other. When the dollar becomes weaker, precious metals tend to go up, commodities tend to go up, and vice versa. So, and right now, the dollar doesn't have a direct correlation to the markets, but right now, a weaker dollar, when it's coming down, is positive for the markets. So now that the dollar is going back up, I would watch for the markets to be weaker. So it's always important to pay attention to the dollar. I'll go over the two companies quickly. We have Microsoft and Apple. Apple right here, it's at this trend line of basically 110 right here that it bounced off of in the last hour of Friday. And this was really, it bounced with the markets. So I'd be watching for this level to hold. If it can hold over here for another day going into this week, you can always enter a position with a stop loss below this trend line that's coming in. It's been holding since the March lows. If we break below this trend line, watch for a bounce here. And if we don't bounce here, this is the trend line we've been holding since March. I would watch. That's when the selling pressure again can get really heavy. And at this point, like I say, like the markets move together. So at this point, if Apple breaks below this trend line, I'm guessing SPY and QQQ will be below their key trend lines as well, which means the market's just going to sell off as a whole. So I would watch for that, and if it does, you can always watch for a retest and then a rejection. But in my opinion, you'd be better off playing puts on, say, QQQ or SPY. Microsoft right here, last one. It's been very choppy lately. I'm honestly not even looking to play this, but for those that are interested or maybe have a position, the support around 197. This can be the next move down because we held below it going into Friday, or when closing into Friday. It broke below this trend line it's been holding since April, and it actually acted as resistance, so which is pretty bearish. So I'd watch for a test of 197. And if we can bounce off that, that may make a good entry. But like I said, it's just going to move with the market really, and with TikTok news, I suppose. And especially with TikTok news, that's why this thing has been so up and down, whipsawing so much, so choppy. So I just really wouldn't swing this right now. But yeah, 197 is the key level. If it drops below, you can watch for 187. And last thing, I've had a lot of members, people asking me what I think, if they should get calls or puts going into next week, or how I think Apple's going to do, if I should swing Apple. And that, like, I just feel like a lot of people have the wrong idea of trading, or how I choose to trade anyways. Like, I don't try to predict the markets. I have no idea what the markets are going to do tomorrow. I have no idea. I have no idea what it's going to do in an hour when the market's open, or in a minute. Anything can happen. You are so uncertain, and you have to realize that as a trader, that you are super, super uncertain. You have no idea what can happen. So my jobs are not to predict the markets at all, but rather to take high probability trades that are showing signs of reversal that statistically have a better reward than risk. Over time, if you take these trades that have better reward than risk, if you use proper risk management and take high probability trades, you will be profitable. So for example, that's why I'm looking to the long side right now on the S&P 500. The risk to reward is just there. The risk right here, if I take this trade bouncing off of this trend line, if you bounce off of this trend line right here at like 333, and then if you use this trend line coming in right below here at 328, or sorry, technical level, that's about a 5-point loss compared to if I have a profit target of 351, right? Which would be almost a 20-point move. So that's better than a 3-to-1 risk to reward ratio right there. It's like a 3.5 to 1 risk to reward ratio. So that's always what I look for. I look for a 3-to-1 or 4-to-1 risk to reward ratio. And just statistically, if you take those trades over time, manage your risk properly, cut your losses when you know you're wrong, and actively managing your stop loss once you're up 20%, moving into break even. Once you're up 50%, moving into 20%, you will be profitable over time. So just wanted to share that thought with you guys. I hope you guys enjoyed. I hope you guys are ready for next week. I'm ready to absolutely kill it with you guys, and I'm super excited. It's going to be a nice week. There's going to be a tons of volatility. I really don't think we just bounce out here. We're really going to see a bounce to the upside pretty aggressively, or if we break below this trend line, we're going to see a pretty aggressive sell-off. I don't think there's any in between. So I hope you guys are ready, and I'll see you guys on Monday.